Hey there, welcome back to Bull and Bill. Today, we're diving deep into a topic that's essential for anyone who wants to grow their wealth, the stock market. Now before you say, isn't the stock market just for financial experts? Let me stop you right there. The truth is, with a little understanding, the stock market becomes accessible to everyone, even if you're just starting out. Most people think the stock market is either a mysterious game or a fast track to wealth, but in reality, it's a lot more straightforward. Today, we'll break down everything you need to know to get comfortable with investing, how to start, and why understanding the stock market can be a powerful tool for your future. Picture this. You walk into a bustling marketplace, but instead of stalls selling food or clothes, each booth represents a company. Imagine booths labeled Apple, Tesla, or Amazon, each one offering you a tiny piece of their business. By buying a share, you're essentially owning part of that company. This is what the stock market does, allowing everyday people to invest in the companies they believe in. Let's start with the basics. The stock market is where shares or pieces of ownership in companies are bought and sold. It's made up of major exchanges like the New York Stock Exchange and NASDAQ, where billions of dollars in shares are traded daily. Think of these exchanges like the booths in our imaginary marketplace, where companies and investors come together. There are two main types of stock markets, the primary market and the secondary market. The primary market is where companies first offer shares to the public through an IPO or initial public offering. Think of it as the moment a company goes public. Then, in the secondary market, those shares are bought and sold among investors like you and me. Here, the prices fluctuate based on supply and demand. There are different types of investors in the stock market, each with unique strategies. Long-term investors focus on buying and holding, which means holding on to stocks for years, often decades, to maximize growth. Then there are traders who buy and sell more frequently, sometimes within the same day, to profit from price changes. A key way to understand the stock market is through indexes. These are groups of selected stocks that represent a section of the market. For example, the Dow Jones Industrial Average includes 30 major U.S. companies, while the S&P 500 includes 500 large-cap U.S. companies across industries. Following indexes gives you an idea of the market's overall health. When the Dow or S&P goes up, it generally means that the majority of major companies are doing well, and vice versa. For example, if you hear that the S&P 500 was down 2% today, that means a broad selection of 500 large companies performed poorly on average, which can often signal a general decline in the market. Here's a fascinating bit of history. The stock market isn't just an American idea. The world's first stock exchange was founded in Amsterdam in 1602 by the Dutch East India Company, which issued shares to finance its massive trade missions. It was so popular that people started buying and selling shares to each other, and just like that, the concept of a stock market was born. Today, exchanges exist worldwide, from Tokyo to London to New York. Of course, with every opportunity comes some risk. The stock market can be unpredictable, influenced by everything from economic events to investor sentiment. The value of stocks rises and falls daily, and while history shows us that the market tends to grow over time, there are no guarantees. So, understanding your own risk tolerance is crucial. One important strategy to manage risk is diversification, which means spreading your investments across different companies, sectors, or even asset types. By diversifying, you're less likely to be impacted by a downturn in any one area of the market. It's the classic idea of not putting all your eggs in one basket. For example, you could own a mix of tech stocks like Apple or Google, consumer stocks like Pepsi, and even a portion of your portfolio in ETFs that represent the entire market. This way, if tech takes a hit, other parts of your portfolio might still perform well, balancing out the risk. Let's bring it back to today. With technology and the rise of online investing platforms, anyone can start investing in the stock market with just a few dollars. There are apps that allow you to buy fractional shares, meaning you don't need to pay the full price of a share if you want to invest in companies like Amazon or Tesla. Even more interesting is the concept of robo-advisors, which are online platforms that manage your investments automatically based on your goals and risk tolerance. Robo-advisors offer an affordable way for beginners to get started without needing to pick individual stocks. Let's tackle a few common questions. First, isn't the stock market just gambling? Not quite. When you gamble, you're relying on chance. But with investing, you're making informed choices. By studying a company's financial health, industry trends, and market conditions, you can make calculated decisions to increase your chances of success over time. Another common question is, can I only make money if my stocks go up? Actually, no. There are also dividends, which are portions of a company's profits paid to shareholders. Not every stock pays dividends, but for companies that do, shareholders receive regular payments, giving them income regardless of stock price changes. So, here's the big takeaway. The stock market is a tool that can help you grow wealth over time. It's not a get-rich-quick scheme. It requires time, patience, and strategy. But if you start with the basics, understand your risk tolerance, and stay invested, you're already on your way. Thank you for joining us on this journey through the stock market. If you found this video helpful, please give it a thumbs up, comment below with any questions, and subscribe to Bull and Bill for more videos on building financial confidence. Let's keep learning and growing together. See you soon!